Hey everyone, Hana Cassis with the Stock Market Academy. I thought it would be a good time to post something about how to actually make money in a bear market. So, if you saw my last post, I spoke about how there are two eventualities that I'm waiting for. Both of those are still on the table. That is that we see a candlestick reversal at the Bollinger Band, or we see continued selling to roughly 3,050, 3050 on the S&P 500. So if you haven't seen that post, go ahead and take a look at it. Those eventualities are still true. But in this video, what I want to address is how do you actually make money in a bear market? So what you want to look for, long story short, is a break in the trend line. So let's jump over to Earthstone Energy. If you go to stock charts, you press annotate, you can actually see. So here's an example where we clearly saw that these levels act as prior resistance. Here means prior resistance means future support. But we didn't see that happen right here. We actually saw price break down. So you should expect more selling here, right below 17 roughly. And if you notice, it did happen on much, much higher volume. So that is a very bearish implication if it happens on higher volume and it breaks the trend line. Let's look at Penske Automotive. They rode the wave of the entire used car market, which has been on fire lately. And if you draw the trend line, it is sitting right at support. So again, if you want to short a stock, what you want to do is you want to look for a breakdown right at this level. And when it happens, you also want to be looking for higher than average volume. If that happens, if the price does not bounce off of the trend line and it breaks below the trend line or it breaks below support, what we think should act as support on higher volume, you should expect more selling pressure. The reason why is that traders like myself from Tokyo to New York City see that and they act on it and price manifests itself. So if you're wondering, how do I actually make money in a bear market? The short answer is trade the breakdown and sell weakness. There's two ways to do that. You could short the stock, which I don't recommend. It's very risky. Or you can buy put options. I detail the difference and why I prefer put options to shorting the stock in my newsletter. It's really that simple. So just sell weakness and look